Hello, good
Hello
afternoon.
everyone. I am Sulakshna, host for this webinar on behalf of Wadhwani Foundation, National Entrepreneurship Network. As we begin the session, I'd like to take you through the phenomenal job that WFNEN is doing in supporting startups, early stage and growth stage entrepreneurs, and SMEs to grow their business. They provide a great free mentoring and learning platform to those who come and register at WFNEN.org and connect them to experienced and expert mentors along with Investor Connects. The mechanism is a very straightforward approach with goal-based, time-bound, structured mentoring. Enrich yourself connecting to 400 plus mentors from various fields of work and make a difference. As we begin, I'm so pleased to be with you and to have the chance to introduce our speaker, Xerxes Vispi Dastur. He is a partner at V.S Dastur Co. and D.J Jasavala Co. Chartered Accountants. Xerxes is an innovative and result-oriented professional with hands-on global experience in finance, accounting, taxation, management audits, and internal audits, business process offshoring, project management, process management, and strategic planning for startups and growing organizations. As partner at V.S Dastur Co. Chartered Accountants, he leads a strong team of young professionals. He is currently Honorary Vice Chairman and Treasurer, World Xerxes Chamber of Commerce Mumbai chapter, which is closely working with our youth to instill in them the spirit of entrepreneurship. As we begin, request participants to mute audio appliances. After the presentation, we would have a discussion session for around 20 minutes where Xerxes would answer your questions. So please send me relevant questions over chat, which would be answered at the end of the session. I would love to have your feedback on today's session. Your input and suggestions for future sessions are invaluable to me. So please leave your feedback on the poll and survey. Without further ado, please join me in welcoming Xerxes. Over to you, Xerxes. All the best.
Hi, good afternoon. Thank you for having me, and would like to begin this presentation on GST, basically. And as you can see from the first diagram, it is an uphill task. GST is an uphill task, and so is the introduction to GST. Okay. So let's start with the concept of GST. What does it stand for? It basically stands for Goods and Services Tax. So what does GST bring to the table? Currently, there are several indirect taxes levied: excise, state sales tax, central sales tax, octroi, etc., each of which are levied at different stages in the logistical chain of production. Hence, a manufacturer would need to pay excise when a finished good product moves out from the factory. Then he needs to pay sales tax when the commodity is sold. Every single commodity currently being manufactured is subject to a multitude of taxes at various stages. GST promises to bring a unified tax structure, since all these taxes will be replaced and subsumed by a single tax, GST, which would be introduced both at the state and the central level. It is therefore appropriate to say that the guiding principle of GST is one country, one tax, and one market. The concept of GST has been set up that it is a single tax with comprehensive and continuous chain of set of benefits from a producer's point of view as well as a service provider's perspective. So both your existing manufacturing taxes as well as your service tax can now be subsumed and claimed by a gentleman under GST. Coming to the concept of GST. So the basic concept of GST is that it's a tax on the value added at each stage of the manufacturing of a product or a service. GST regime is currently new in India. However, it is not so globally. The fundamental concept of GST is not new in the Indian tax structure. It is a value-added tax, and we in India have been associated with other value-added taxes such as VAT, sales tax, service tax, etc. The idea of GST is that the impact should only be on the value added to the good or service at each stage. At every stage, there is a set off permitted. for taxes paid at the previous stage. This offset of taxes through a tax credit mechanism called input tax credit, okay, we will deal with at a later stage more in detail. This eliminates any cascading effect of taxes. This provides a clear pass-through mechanism by which a final product only has one tax which subsumes all the other taxes at every other stage. The current difference lies in the fact that under service tax, VAT and CST, one could not offset a particular tax against another. For example, a service provider could not offset his service tax against the VAT on assets purchased. GST being a common platform or a common uniform tax mechanism which handles both goods and services, this allows us to club all indirect taxes paid at every stage and provides a seamless tax credit mechanism for everybody. So let's look at the taxes which are currently being subsumed into GST. So taxes on manufacturing can be broken up into two components, central taxes and state taxes. So under central tax, you have a central excise duty, you have excise duties of various types on medicinal, other preparations, additional excise duties, you have additional duties of customs known as CVD, then we have special additional duty of customs as SAD, then you have service tax, and then you have central surcharges and cesses. As regards the state taxes, you have a state VAT, you have a central sales tax of the state, then you have an entertainment and amusement tax, you have luxury tax on advertisements, you have a purchase tax and entry tax, you have taxes on lottery, betting and gambling, you have various state cesses and surcharges which also apply to the goods and services. All these taxes are now subsumed into GST. However, as usual, there is always some fine print from the Government of India, and the fine print here is that the taxes which will not be subsumed. So definitely taxes such as income tax, basic customs duty, property tax, road and passenger tax, any toll tax, any stamp duty, and any taxes on consumption or sale of electricity cannot be subsumed into GST. So let's look at why is GST required. Now that we have a basic understanding of what GST is and what are we really talking about, let's take a look at why exactly do we need GST. GST has been slated to be a game changer which will totally overhaul the current existing tax structure in our country which has been prevalent since independence. Okay, let's look at what are the benefits GST gives to all the stakeholders in business today. So what are the benefits of GST? So one most obvious benefit of GST is that there is a reduction in the prices for consumers, because ideally there will be no multi-point taxation, and taxation will be done on in a seamless manner. At every stage you will be able to take input credit, okay, and hence whatever credit you cannot take, the manufacturer will still be able to apply for a refund. Hence the consensus is that GST will bring down overall prices finally once everything works. Okay, if you look at the GST implementation across countries, and GST has been implemented in many countries earlier already. In the short run, GST has been a painful exercise and has definitely led to an increase in prices, but on the long run, it has, once the system has worked, there has been an overall reduction in prices. In order to ensure that the benefits of GST are passed on to the customers, the government has also introduced an anti-profiteering clause in the GST rules to ensure that the benefits of these subsuming of all these taxes is passed on to the end consumers. So we are all hoping and keeping our fingers crossed that this happens and will overall lead to a reduction in prices. Let's talk about simplicity. Technically, the government feels that by introducing one comprehensive goods and service tax, it amounts to a simplicity of tax. Yes, it does amount to a reduction in the multiplicity of tax. However, I'm not so sure whether it is going to be a simplicity of tax, because there is so much fine print in the GST rules, and there's so much gray area that I'm not really sure whether it's going to be too much of a simplicity. But we're all keeping our fingers crossed that the reduction in the multiplicity of taxes will prevent any cascading and double taxation, and hence the taxation will become simple. The other thing is the benefit of GST is it now makes us into one large common national market. Because of the uniform tax structure, it will be safe to say that GST promises to deliver a uniform tax regime across India, and in the entire country would now be a common market, okay, which will run through with GST's tagline of one country, one tax and one market. Then GST is supposed to be a non-intrusive electronic tax compliance system. We are all hoping that GST, when it finally happens, will be completely system dependent and will require a minimal manual intervention. There are loads of reporting compliance. However, since all this GST related compliance is system based, it is slated to be a non-intrusive tax compliance system, and at least that's what we have been promised. Let's wait and see what reality is really like, and whether the GST network, which is in charge of setting up the GST system, delivers on its promise. Let's look at the benefits to the revenue department. So from the department or the government's perspective, yes, the main advantage is that it's a simpler tax system. Simpler especially for them because they've pushed the onus of compliance completely onto us, the consumers and the taxpayers. So definitely reports, etc., will be more system generated and will become easier for the government, and we are hoping that the cost of this compliance will hopefully lead to a reduced cost of compliance for the government overall. One other thing is that it will definitely lead to a broadening of the tax base, because unregistered dealers or manufacturers are liable to be brought under the overall GST net, because anybody who's unregistered will not be able to enjoy the benefits of the subsuming of the taxes. So to bring GST, etc., into a proper logical chain, this will definitely involve bringing more and more of the parties into the broad base, leading to an overall increase of the number of taxpayers in the country. Since GST is very system dependent, and there is a lot of tax compliance which needs to be done with a whole set of returns to be filed by every entity in every state it operates, we're definitely hoping that this will lead to improved compliance by both large as well as smaller taxpayers. And lastly, I'm sure it's going to be an efficient use of resources. Okay, because quite a lot of the information will actually flow from the system. So from the system itself, a lot of information will come. So it will really hopefully amount to faster scrutinies, faster assessments, etc. And it will definitely be a more efficient use of resources for the department. Moving on to the overall rationale for GST. So let's understand now, GST basically is a destination-based tax. Okay, that means the end destination where the service has been supplied or the goods have been supplied is where it is offered for tax. Let's take an example that Mr. A in Mumbai sells goods to Mr. B in India, if the GST, sorry, in Delhi, my apologies, if the GST on this transaction is ₹10, which state gets the tax benefit? Does it accrue in Mumbai, where the goods have been manufactured, or does it accrue in Delhi, where the goods have been sold, or is it 50-50? Well, the answer to this is that it's 100% in Delhi, because the main rationale behind GST is that it's a destination-based taxation for the purpose of the levy, and hence it doesn't matter where the goods have been manufactured, the tax would be levied at the place of supply, which is Delhi. This is going to lead to a situation where you're going to have manufacturing intensive states will basically lose revenue to states where the actual consumption of the supply will happen. And because of this, the government has actually set up the GST network in such a way that there is a compensatory payment which is going to each state for their revenue loss. We're hoping that all this holds true and all the states and the government keeps their commitments going forward. Earlier, tax was applied on a specific set of transactions, while GST, there is a shift. GST encompasses every transaction except for a few specific transactions. Okay, so all taxes are covered. It's a comprehensive tax except for some exempted goods and certain goods which are outside the purview of GST. Of course, these transactions which are below the threshold limit would not be covered under GST. However, reverse charge implications would definitely apply. Reverse charge implications will definitely apply. We will deal with this reverse charge in some time in the coming slides. So let's look at the overall model of GST. GST can be broken up into interstate supply, which is interstate IGCST, and there is intrastate supply, and intrastate supply stands for central as well as state goods and state GST. So any transaction which is done between two states would be subject to an IGST. IGCST model is where the center would levy the IGCST and then share the revenue with the states in a manner in which has been decided between the centers and the states. As regards intra-supply would, every transaction which is an intra-supply would levy two taxes, both a CGS, central GST, and a state GST, and both of these would have to be added and charged to transactions within. The good news here is there is no distinction between the raw materials and the capital goods allowed in this input tax credit. Okay, the tax base basically covers all goods and services up to the final point of consumption. Okay, let's understand basically CGST, SGST, and IGST along with the chargeability of each of these. Earlier in the presentation, we mentioned that GST is one tax to replace all other indirect taxes. But on the previous slide, we've clearly shown that there is IGCST, there's CGST, and there is SGST. Why is this? Because India being a federal country, we have the federal government at the center and we have the state governments. And both these governments need to share the tax and the revenue base. And to share this tax and this revenue base, this system has been set up. As long as you're dealing with a supplier within your same state, then that amounts to an intra-GST transaction, which would be subject to CGST and SGST. If you're dealing with a transaction from outside your state, that would be subject to only IGCST. The IGCST revenue accrues to the center and the center has developed a revenue sharing model with all the states, and based on that revenue sharing model, that revenue will then be shared with the states. The CGST and the SGST are state revenues and will be kept by the state and the CGST at a later stage will be shared with the center by the state. While the IGST is first collected by the center and shared with the state, the CGST is collected by the state and then shared with the center. Okay, let's now understand more details of intrastate GST. As I discussed, the intrastate has the CGST and the SGST. These will both be levied jointly on intrastate supplies. We come to interstate GST or IGST. IGST will basically be levied on transactions between two states. The applicability of this will be on all supply of any kind of goods or services between two states. The export of goods will be at 0 rated. We will cover exports at a later stage, so you can understand that there are some specific requirements for claiming export and how do you manage the input tax credit for export. Coming to input tax credit. So the idea behind GST and input tax credit is, first, it should be seamless. Second, it should be across all kinds of goods and services. That means you will be able to take credit, input tax credit on any kind of GST paid as regards in the manufacturing process as well as the supply of services are concerned. Then you have an offset mechanism. Each of these SGST, CGST and IGCST can be used to offset against the same identical output taxes which you have paid. However, there are various conditions and there is a preference order by which this can be offset. Okay, let's deal with the offset mechanism. So the offset mechanism, as you see this chart, don't let this chart confuse you too much. On the left, we've got the input tax credit and we've got the output tax credit. Basically, it shows what input tax can be offset against which output tax liability. All right, so starting with SGST, SGST can always first be offset against output SGST, but it can later be offset against IGST as well. CGST has to first be offset against CGST and it can then be offset against IGCST. IGST, however, can be used and offset against all three taxes. So IGST can be offset against SGST, CGST and IGST. You'll ask, why is this? The reason for this is that this is the formula which the government of India has arrived to share the revenue between the center and the states, and each state and center will get the net differential between how this has been charged in each manufacturing process, and that is why there is this difference on what is your preference and what you have to use the input tax credit first for. This is important and should be borne in mind at all times. Okay, let's now come to the conditions for claiming the input tax credit. Basic input tax credit has to be claimed only against a tax invoice, a debit note, and the most important thing is that goods or services should be received. All right, there is an exception to this, that if goods are delivered to the transporter on behalf of the manufacturer, on behalf of the client, then that is treated to be goods which have already been received, and hence at which stage you can take the input tax credit. One important thing is that input tax credit, if it is claimed on any invoice, that invoice needs to be paid in 180 days. If you do not pay that invoice in 180 days, then the input tax credit would have to be reversed along with the interest on the amount claimed. Please bear this in mind. So you can't just take an invoice and make a provision, claim the input tax credit and sit with it and not pay it for longer than 6 months. If you don't pay this for longer than 6 months, then you will definitely need to reverse the input tax credit along with the interest on the amount claimed. Sorry. Availability of credit from earlier laws. This is a very important concept because you need to carry forward the SENVAT or the SENVAT excise and service tax credit into CGST, IGST, and state into SGST. So this chart basically tells you about how you can carry forward. Let's understand the levy under GST. So basically GST is, as I explained to you earlier, is a consumption or a destination based principle. Okay, that means wherever the goods or the service has been delivered, that is where the GST becomes payable. Determining the place of supply is very important, as tax revenue will accrue in the state where the supply has incurred. So let's look at a few basic illustrations for IGST so that you get an idea. So Mr. A, based in Maharashtra, supplies goods to Mr. B, based in Gujarat, and he pays 18% IGST. Mr. A has an input credit of CGST 6% and SGST 6% from local purchases. So hence he only pays now 6% to the CG account, central government account, under IGST after offsetting. Mr. B, who's based in Gujarat, who had purchased these goods, is now selling them locally to Mr. C, who's also based in Gujarat, and they are liable to pay SGST and CGST at 14% each. He can utilize the input credit of 18% of IGST first for his CGST, and then the balance 4% against SGST. The balance differential of between 28 minus 18, the 10% he will have to pay in cash. Let's look at the keys to effective implementation. The key enablers for ensuring that GST goes through, one thing is a uniform e-registration. So there's one standard e-registration which you have to do to migrate. Unfortunately, this issue doesn't hold true for all states, and if you're doing business in multiple states, you need to e-register in each of those states. Okay, you have to still file a common e-return for CGST, SGST, and IGST. There are returns which have to be filed as per a schedule, which we will discuss in some time. There are system-based validation and consistent checks on the input tax credit, and the manner in which tax refunds are being taken. Hopefully, most of these returns will be auto-populated from vendor returns and the accounting systems. So that will amount to an effective fund settlement system between the center and the states. Let's look at the role of the government. So the government first acts as a clearinghouse. So the government has set up a Section 8 company called GST Network, and the GST Network is the The GST network basically is the responsibility of the government. It is an SPV which has been set up between the central government and the state governments and various financial institutions. What has the GSTN done? It has basically created the draft legislation and amendments on GST. They have jointly come together between the center and the states and determined the rate of taxes. They've created the mechanism by which the reconciliation of tax collection under IGST, CGST, SGST will flow to all parties so that there is limited friction at a future stage. They have also developed the process for scrutiny of all such, for the scrutiny of the system and maintenance of the system, etc. going forward. Okay, what are the other important fundamental concepts we need to understand as regards GST? So the main thing is, what is the taxable event? When does the tax actually come into play? Currently, taxes and their taxable events are listed as excise duty you would pay on manufacture, sales tax you will pay on sale, service tax you would have paid on realization of the service. Under GST, the taxable event is not the date of manufacture, but is the supply of the good and services. Okay, the supply is the key thing. We have dealt with supply at a later stage. Okay, as you can see from the presentation, that we have said that intrastate will attract both SGST and CGST on sales within the state, and IGST will apply to interstate supply of goods and services. Okay, now let's look at GST on import of goods and services. So as regards the import, the GST will follow the destination principle. Okay, or people who are familiar with service tax will understand the place of supply rules as were in the earlier service tax law. The tax revenue here under SGST will accrue to the state where the imported goods and services are consumed. Full set-off will be available on the GST paid on import of the goods and services. However, import of goods and services will still attract basic customs duty and GST. Currently, you will note that import of services will attract IGST in whichever state they are imported, but you will only have to pay IGST on it, on services, while on goods you will have to pay a customs duty as well as IGST. Basic custom duty continues. However, CVD or countervailing duty on excise and SAD or special additional duty, which we used to pay under sales tax and excise, has now been done away with and is subsumed into the GST law. We now come to a concept of reverse charge on imports. So there are, if you were to take services on imports, all right, the import of these services will be on a reverse charge mechanism, and the onus for paying this service charge will be on you, the recipient of the service, because the service provider is located in a non-taxable territory. So it will be incumbent on you to calculate and pay this tax basically on a reverse charge basis. So let's go on GST on exports. Okay, exports basically would be exports are currently not subject to GST, and they would be, hence they are called zero rated. Similar benefits will apply even for entities in special economic zones or SEZs. However, there is no benefit. There is absolutely no benefit for domestic sales from an SEZ to a domestic tariff area. GST will be paid by exporter on procurement of goods and services will be refunded. So any GST paid by the exporter for the procurement of the goods and service can be applied for a refund under the new GST rules, and that refund can be obtained. We will deal with this refund at a later stage as well. Registration under GST. I'm going to hurry up a little because I've been told that we are running a little behind schedule. Okay, so each taxpayer needs to be allotted a PAN-linked GST identification number. This GST identification number will be unique and will allow you to facilitate all transactions with the GST. The exact design of this number is being worked out currently in consultation with the Income Tax Department, and we look forward to hearing from them. Okay, now this is the crux as regards the compliances under the GST. As you can see, there are periodical returns to be filed. We will deal with periodical returns as well later in the presentation. There is significant compliance. As regards input tax credit can be taken, but it needs to be verified at each stage. There is a common standardized return. The common standardized return is for each type of tax, and there's a common standardized challan for how the taxes are to be paid. Currently, we have not been given full details of how the taxes will be paid, whether they're going to different accounts, etc. But we are hoping as we come nearer to the GST deadline, the government will release more of these details. So let's look at the returns under GST. And under GST, under the non-composition scheme, we have the GST R1 for outward supplies, and in this you have to mention all advance receipts, etc. The due date for this is the 10th of every month, and it needs to be filed by every registered taxpayer, and it has to be done on a monthly basis. GST R2 is all inward supplies. This has to be prepared after reconciling the GST1 of the supplier. So for each of your suppliers, you have to reconcile the GST1 and file the GST R2 by the 15th of the next month. Who is supposed to do this? This has to be done by the registered payer, a registered taxpayer who is the recipient of the goods or the service. This also needs to be done on a monthly basis. GST R3 is a summary of GST 1 and 2 and the amount of the net tax payable after taking credit. This has to be done by the 20th of the following month. This also has to be done by the registered taxpayer and has to be done every month. GST R9 is the details of annual expenditure and income, which has to be done by the 31st December of the next financial year. Registered taxpayers need to do this, and this is to be done once a year. We are hoping that most of these forms will be self-populated because of the system, but we don't know how this will currently work. And we look forward to seeing what the government actually takes out. Now we come to returns to be done under the composition scheme. So under the composition scheme, you have only two forms to fill because the composition scheme has only quarterly returns and an annual return. So you have GST R4, which gives you the details of all the inward and outward supply and the net tax payable and paid for that quarter. This needs to be done by the 18th of the next month after the quarter, and it has to be done by the composition taxpayer. This has to be done by the end of by the 18th of the next month after the quarter. So you will have 4 quarterly returns. Then you come to GST R9A. 9A is the annual expenditure and income for people who are under the composition scheme. This also has to be done by the 31st December of the subsequent year to be done by the composition taxpayer, and it has to be done annually. Please note that GST payment has to be done before the return is filed. Otherwise, your return will not be accepted, because I assume this works like the service tax, where they will ask you for a token number which will link the payment of the tax with the return being filed. So let's come to the place of supply of rules. So location of recipient of goods and services is now the key as far as GST is concerned. Okay, earlier as far as supply, we were wherever the manufacturer or where the goods were supplied from is where we used to say the services being performed. But under GST, that is not the case. Under GST, the location of the recipient and where the supply has been given is the place at which this has to be taxed. Let's look at the time of supply. For normal supplies, CGST, SGST, and IGST on the goods shall be payable at the earliest of the following dates. Goods are removed from supply for goods required to be removed. Goods made available. This is for goods which are not required to be removed, or invoice issued, or payment received, or recipient shows receipt. Please note it is payable at the earliest of the following dates. Okay, let's come to time of supply as regards continuous supply of goods. Successful statements of accounts or successive payments are involved. The date of expiry of the period to which such successive statements of accounts or successive payments relate. No successive statements of account, date of issue of invoice or any other document, or date of receipt of payment, whichever is earlier. Okay, let's look at the time of supply. For supply of goods under reverse charge mechanism, time of supply shall be the earliest of the following dates: receipt of goods, the payment, the receipt of the invoice, or a debit in the books of accounts. Let's look at the specific rates under GST now. So government currently has given 5 rates, tax rates: 0%, 5%, 12%, 18 and 28%. It has also introduced a concept of a small taxable person, which is a person who has a turnover of up to 20 lakhs a year. Okay, for this kind of person, there is an option of whether he chooses to opt out of registration because he's below the threshold limit, or if he would like, he can voluntarily register if he wants to be part of an overall supply chain and allow all his subsequent users to take advantage of the tax. Then it makes sense for him to be voluntarily registered. It is. Let's look at the provisions of unregistered dealers going forward. So unregistered dealers is the major issue here. Okay, unregistered dealers will not people who are buying from unregistered dealers will not be able to do so without payment of a reverse charge. Now every purchaser has to make an invoice or a bill of supply, pay the tax as required from the unregistered dealer, and then file a return to claim the input tax credit on this. That means for every purchase you make from an unregistered dealer, you will have to calculate that on that item, what is the service, what is the GST applicable to that item, calculate that GST and pay it to the Government of India. Only once you pay it to the Government of India can you take input tax credit on it. This hence puts significant compliance on all businesses which are buying from unregistered dealers. So let's look at a concept of casual taxable person. Who is a casual taxable person? A casual taxable person is a person who occasionally undertakes transactions involving supply of goods or services. That means, to take an example of a casual taxable person, is someone who's sitting in Bombay who attends a trade fair event in Bangalore. He becomes a casual taxable person for as regards taxation in Bangalore is concerned, and hence he needs to register as a casual taxable person in Bangalore and pay the tax. Unfortunately, the compliance, there is no threshold as regards a casual taxable person, and any sale of any amount, he needs to obtain a registration irrespective of his turnover. There is no, as regards validity, he needs to apply for this registration 5 days prior to the commencement. Okay, the process is that he needs to apply with the office, and he needs to make an advance. He needs to pay an advance of the deposit of his tax liability, and after the event is over, such person needs to file a return within 1 week and claim, and either pay additional tax or claim a refund against the advance he has paid. Now let's come to reverse charge. So there are certain type of transactions which attract reverse charge. This reverse charge is similar to the service tax provision. So people who are familiar with service tax and how there was a reverse charge in service tax will understand that GST has taken the same system here going forward. Liability to pay the reverse charge will be on the recipient of the goods and service. This reverse charge has to be paid fully in cash. Okay, you need to pay this amount to be eligible for an input tax credit. You cannot take an input tax credit unless you have paid the reverse charge. All right, and that is declared on your return. There is significant compliance involved in this, because everybody who buys from an unregistered person would need to make those payments on a reverse charge. And these reverse charge, any purchase from the unregistered, the person would also have to prepare an invoice or a bill of supply and a payment voucher. So there are 3 things which need to be prepared for 3 things which need to be prepared and filed and uploaded on the system before you can take the input tax credit on the reverse charge. Coming to the invoice format, as you can see, we are running a little short on time, so I'm not going to read everything, but this is pretty clear on the presentation as to what details need to be there on a format. This is a specific format of the invoice which has been prescribed by the GSTN, and anybody working under GST has to follow this invoice. Okay, so I'm going to skip this and the next slide to push it around to come to the composition scheme. Okay, so the government has introduced a composition scheme. A composition scheme, earlier the limit was 50 lakhs, but 2 days ago the limit has now been increased to 75 lakhs. There are certain types of businesses which can opt for a composition scheme and pay a tax based on the turnover. Those businesses are, and the tax rates on that are 1% of the turnover as regards the manufacturer, 2.5% of the turnover as regards restaurants and people who are doing food supply business, and 0.5% of the turnover in cases of traders. This is only the CGST part. So effectively the rate should be 2%, 5%, and 1%, including the CGST. One important thing to be noted here is this is not applicable for interstate suppliers. So interstate suppliers cannot apply under the composition scheme. cannot apply under the composition scheme. They have to continue. They have to continue under. They have to continue under the non-composition scheme. The other requirement here is that they need to apply annually. You have to make a choice once a year as to whether you want to go under the composition scheme or not. To that, you have to make an application to the authorities, and you have to renew that application on a yearly basis. Composition scheme definitely has some advantages. It has only a single, as we discussed earlier, it has only one quarterly return every year. It has one annual return, okay? But now the problems, it cannot take any input credit. Since you're on a composition scheme and you're only paying a tax based on your turnover, there is no tax against which you can take any input tax credit. So any input GST which you have will have to be written off as an expense. You also cannot issue a GST invoice. You need to issue something called a bill of supply. And this bill of supply, the bill of supply has to be given to your customer, and the customer also will not be able to claim input tax credit because you in turn have not paid any GST. So your customer cannot take any input tax credit because he only gets a bill of supply and he doesn't get a GST invoice. Okay, so let's come to a concept of electronic cash ledger. This is a ledger, this is similar to the 26AS which you currently have for income tax. So this will be an electronic cash ledger maintained on the GST network for each taxpayer, which will give you the total details of what is your output GST payable, what was your input tax taken, and what is being refunded or what has actually been adjusted and what payments you have done. This will be a running ledger which will need to be reconciled by you on a month-to-month basis to make each payment. Okay, now let's come to the specific issues currently we've identified in GST. So one of the issues we discussed was definitely the issue about making any purchases from an unregistered dealer. As you know, any unregistered dealer, any purchase from an unregistered dealer would be subject to input tax credit on a reverse charge mechanism. So basically, any purchase you make from him, you would need the person who's the recipient of the service or the purchaser will need to make a invoice, he will need to make a payment voucher, he will need to make a actual payment of the tax, and based on that, after taking the tax, he will be able to claim the input tax credit. So it is incumbent on them, it will be incumbent on you to keep matching this and ensuring that your input tax credit plus the GST which you're paying matches with your ledger. Your e-ledger is in sync. The government has also introduced the concept of GST rating. So each entity is going to have a publicly available system of GST rating to see whether how good a GST compliance manufacturer or supplier you are, that how are you following the rules, etc. How this rating will actually pan out, currently we don't know, but we look forward to hearing what's happening. Okay, now the main issue is the interstate credit availability. Currently, the way it is set up is that CGST can be only offset against CGST, SGST can only be offset under SGST. So here you may wind up in a situation where all your CGST you may not be able to cover. So this break in the interstate GST paid, which you will not be able to take it as an input tax credit, can become an issue and may at some stage lead to an escalation of the cost of the product finally. So now the government has also introduced something called TDS and GST. So who is liable to TDS? So just now the government has just recorded that there are only certain industries and there are certain government entities which are liable to deduct TDS, but the law is evolving on this and we don't know who else will be brought into the fold at some stage. The rate of TDS currently is 1%, so the deductor has to deduct 1% and pay this to the credit. This TDS will then be allowed as a deduction against the service provider's liability. This functions similar to our current income tax TDS, which most of you are familiar with. The threshold currently is 2,50,000 rupees of payment a year. The timeline for the payment has to be done by the 10th of the following month. Okay. We now come to the impact of TDS on government civil contractors. This TDS has especially been brought in for government companies and various other certain categories of people who are making payments. So typically government civil contractors take contracts from the government. A will take a contract from the government. A doesn't do all the work. A in turn outsources some to B. B in turn passes it on. So there has been a cascading of subcontractors involved as government, and we have found that a lot of these subcontractors were in effect not being subject to tax, so they were getting away from payment of tax. By putting a clause such as this, effectively every intermediary in the cycle will have to deduct tax, TDS at source on GST from each person down the chain. So you may wind up with a situation where the last subcontractor also will have TDS. This effectively will lead to a broadening of the tax base. It will bring more people into the tax circle and hopefully will lead to more efficient systems as regards government contracts are concerned. Currently, only specific industries have been covered, but we're not sure whether this will be added. The whole purpose of this was to ensure GST compliance in the unorganized sectors, especially such as construction, roadworks, etc. Okay, now we come to a very important thing as far as Indians are concerned, revision of a return. This is frightening because under the GST system currently, there seems to be no manner in which a revision of a return can be done. However, you can amend in the next return. Okay, such an amendment is subject to a specific timeline, and the timeline is that it has to be, you can amend the return up to the due date of filing of the return for the month of September of the next financial year, or the actual date of filing of the annual return, whichever is earlier. I can look forward to lots of representation from industry on a change to be made on this, because I really find it absurd that you cannot revise the return. Something seems funny here. Why should a revision not be allowed? Okay, let's look at the transitional provisions which are pertaining to existing assessees. How do they migrate? They need to migrate. The registration window was open. That window is now closed for existing assessees. For new assessees, a new window will open, and at which stage you can do it. We then come to the issue of unutilized input credit to be allowed to be carried forward. Okay, so any input credit which you have in your books can be carried forward, except to the Swachh Bharat cess and the Krishi Kalyan cess, which you will not be able to carry forward. Duty paid on stock held on trade on July 1st would all have a component of excise and VAT as well as import duty. Okay, so you are allowed to take this excise and VAT, and as long as you can prove that there is a duty paying document, then 40% of the duty amount would be allowed. And the government has just 2 days ago allowed that this amount of 40% goes up to 60% for specific items where the GST rate is in excess of 18%. So only where the GST rate is in excess of 18%, you can take 60%. Otherwise, all other excise and VAT can be claimed up to only 40%. Okay, question on export of services. So the supply of any service shall be treated as export of service when these following 5 conditions are fulfilled. The supplier of the service is located in India. The recipient of the service is located outside India. The place of supply of service is outside of India. The payment is received in convertible foreign exchange, and the supplier and recipient are not merely establishments of the same person. Okay. Now, important thing is that all these clauses have to be satisfied. All these clauses have to be satisfied for it to be called as export of services. There is no or. Each of these clauses satisfied, only then can you say that the service has been exported. GST will not be charged on any such export, okay, because exports will be treated under the new rules as a zero rated supply and will be subject to no CGST. However, the person making the exporter will be allowed to avail CGST, SGST, and IGST paid on the paid on the inputs as well as the input of services used for the purpose of exports. So the exporter can then claim a refund. Exporter can claim a refund on this. So let's come to refund of GST. So input tax credit can be refunded only if first there was an export of goods and services and the GST was paid on the input. The input tax credited accumulated is due to a higher rate of tax on input as compared to the outputs, and the refund is on a final assessment, or for example, excess payment was erroneously made. Here the government has been kind and has allowed that finally a refund can be made or can be applied for. The process for making a refund, you need to submit an application to the GST network. It has to be before the expiry of 2 years from which the refund accrued. Okay, you need to submit documents as applicable. So if there's you have to submit the invoice, the shipping bill, the main receipt, the bill of lading, the bank realization certificate. I assume this is for manufacturing product. If it's an export of service, then you would only have to supply your invoice and your bank realization certificate. If you're in a situation where your inputs are at a higher rate than your output, then refund will be proportionately allowed based on the ratio of export turnover to total turnover. Okay, 90% of the refund is to be processed in a week. This is the good news for all of us, that 90% of the refund has to be processed. The balance 10% the government can inquire, look into, etc., but has to process the refund within a further 60 days. So this is finally some good news for us, that at least by the end of 2 months, we will definitely get a refund. Okay, now coming to GST for e-commerce. So under the current regime, as GST as regards sellers, okay, so under the current regime, sellers are charged VAT and CST to customers. The online marketplace charges a fee to the seller. The service tax charged by the online marketplace also becomes a cost to the final buyer. Under GST, the seller would charge a CGST and a GST for intra-state sales and or an IGST for inter-sales. All input taxes, that means GST on the manufactured product plus GST on any service tax, etc., will all be available for input tax credit. That means finally you will be able to take input tax credit on everything. This in effect will reduce the overall tax burden and allow a seller to revise his pricing strategy to bring his overall price down and become more competitive in the market. Okay, how will GST impact the aggregators? Current regime, the online marketplace charges a service fee on basis of which there is a service tax on the facilitation fee. The online marketplace can avail service tax on any input service. However, any VAT credit on purchase of goods was not allowed. Under GST now, all this will be allowed, and CGST and GST or IGST, depending on the nature of the transaction, will become full input, and he will be able to take the full input tax credit, and hence all credit of taxes on the input side are possible, which means the pricing can be analyzed taking into account the competition in the market. So the main issue here was whether we could take the full input tax credit and the place of supply. So here you can take the input tax credit for everything. There is no restriction. However, in the case of certain items which the government has excluded, such as motor vehicles, on motor vehicles, employee consumptions, immovable property, okay, apart from these, all input credits can be taken seamlessly. As regards place of supply, the place of supply shall be the location of the recipient as regards B2B transactions, and the location of the supplier in case of B2C transactions. So this is very important, that the location and the place of supply depends on whether it is a B2B or whether it is a B2C. Please bear this in mind. So let's look at taxability now. All supplies will be taxable. Registration will need to be obtained in all taxes where the operations are carried out. So if an aggregator is functioning in all 29 states and the 7 union territories, they will need to register everywhere. The point of taxation shall be the earlier of the following: the date of the invoice, the date of receipt of payment, or the date of completion of supply if invoice is not raised in prescribed time, or the date of receipt. So whichever is earlier will need to be the date at which the point of taxation will accrue. Now, there is also a tax TCS for GST. Okay, so an aggregator has to deduct an applicable 1% TCS on all e-commerce transactions. The supplier in turn can then claim credit of the TCS amount. The e-commerce operator, like normal, will have to file returns, etc., to clearly specify how much was the TCS deducted from each supplier. That supplier can take credit for the TCS and then finally discharge his final overall liability. We are hoping that most of this would become automated, because the system is supposed to be automatic and you'll get automatic credit, etc. There is, however, an issue here that all suppliers, I'm given to understand that most large online e-commerce platforms have lakhs and lakhs of suppliers, and some of these suppliers may currently not have been registered. The GST registration limit of 20 lakhs a year. If these suppliers want to take advantage and claim the TCS, then it is incumbent on them to get registered, even though they are below the 20 lakh limit. That is what we meant by a voluntary registration. So this is the advantage of the voluntary registration, that if you are registered, even if you are below the 20 lakh limit, then only you can take offset this TCS and offset it against your liability. Otherwise, you will lose the TCS amount. We now come to a very important concept which is called anti-profiteering measures. Now, the government has created an anti-profiteering clause in the GST so as to ensure that any benefits of the reduction of the GST and the reduction of the cascading of these taxes must necessarily be passed on to the end consumer and cannot be taken only by the company and benefited. How these anti-profiteering measures will actually work is anybody's guess, because currently the government has not really given us any mechanism or have not given us any safe harbor rules or have not given us a plus or minus 5% margin or anything. So we need to see how this will be implemented. And this, of course, goes without saying that we are quite confident that the government will implement it, as they've done in other taxes. How effective this will be, we have to see going forward. So let's come to some of the FAQs we've compiled for e-commerce. Are GST threshold limits available? No. If you are supplying your own goods and services through your own portal, or you are a supplier of goods and services through a web portal, irrespective of annual turnover, you are required to obtain registration and discharge tax. So those thresholds do not apply to you. You have to register. Can I opt for composition? E-commerce operators or ECO, suppliers of goods and services through ECO, are definitely not eligible for composition levy. However, a person making intrastate supply of own goods over own digital or network platform or facility can opt for a composition levy. So there is a way out of opting for a composition levy, but it is restricted to only a person who's supplying his own goods over his own digital or electronic facility. Only then. Are there any relaxations for online information and data access or retrieval systems? Currently, there are special provisions have been provided in the IGST Act regarding payment of tax, where online information and database access services are provided to non-taxable online recipients in India. There is a need to provide for such special provisions, making the overseas provider as liable to pay tax as the place of provision of services in India, and a non-taxable online recipient cannot be expected to fully comply with these formalities. Further, in such online information services, it is very easy to manipulate the location to simply escape the tax liability. Hence, the government has brought this clause where any person who's receiving and not registered under GST but receiving online information and database retrieval services in relation to any service would amount to a taxable entity and would have to charge on reverse charge. So let's just come to a simple summary as to who shall pay. So basically, who shall pay will be the taxable persons as defined under Schedule 3. On what will GST be paid? GST shall be paid only on the supply of goods and services and on the value addition. It is a value addition at every stage. So you will pay GST only on the value you are adding at each step of the service or the production. When will GST be paid? GST shall be paid at the point of supply. Where shall GST be paid? GST will also be paid as to where is the place of supply. To whom shall it be paid? It shall be paid to the respective government depending on whether it is an interstate or an intrastate transaction. And how do you pay? You would have to pay GST either by cash or by credit card. And we're still looking at, government is still looking at how this will evolve. So currently we don't have any information open, but we are hoping that this will come through at some stage. Okay. So I thank you very much. This was the basic presentation on GST, and we're open to questions now.
Xerxes, you have really very extensively covered each and every aspect, and I'm very sure that our attendees today have really got immense knowledge acquired from your versatile talking on the subject. I'll just throw a few questions to you, which has come from the attendees. So Javed Iqbal asks, we buy many products from various suppliers and sell the same offline and also online through our own website. Just wanted to check whether we are liable to deduct TCS. If yes, then should we deduct the TCS of all supplier? What will happen for offline sales?
No, what is your platform? If Javed can just give us more information on the platform, because if he's an aggregator and he's selling, he basically would be covered under the e-commerce operator. He would amount as an e-commerce operator, and he would then have to deduct
Javed, can you just hello Javed?
Even terms, it is usually negotiable.
I
opened the line for Javed, but
no problem. I'll answer the question. Yes, he would definitely have to deduct the 1%, irrespective of whether the supplier is within the limit or not. Then the onus is on the supplier whether he wants to be registered or unregistered to claim the TCS.
Sure. The next question is, we are a marketplace ourselves. Do we have to know? Do we have to now make the invoices on behalf of the sellers, or sellers can continue making their invoices? This question comes from Karnesh.
Yeah, so you are an online marketplace. You are not the person selling. So who shall pay is only the taxable person, and the taxable person here is the supplier. So the invoice will still flow from the supplier only.
Next question is from Chitra. She asks, what about Swachh Bharat tax applied by services such as restaurants?
No, so now there will be no cess going forward now. So no restaurant will be charging you any cess, because all the cess has been subsumed into GST. So if the restaurant has gone under composition scheme, then if it's a restaurant which has taken the composition scheme and is paying under 5% as the composition scheme, then that cannot be taken as input tax credit. That is one of the exceptions in input tax credit, that restaurant input tax credit cannot be taken. And anybody who's under composition, so even if you have a supplier who's under composition, if he has gone under composition, then he cannot raise an invoice itself. He will only be able to raise a bill of supply. So there will be no GST mentioned in the bill of supply, and hence you will not be able to take any input tax credit.
Vinita Chandi, can you please ask your question to Xerxes? Vinita Chandi. Hi, Vinita.
Hello.
Yeah, can you please ask your question to Xerxes?
Yeah, my question was with respect to existing stock, and how do I claim the input tax credit for that?
So the existing stock, your input tax credit can be taken up to 40% if your stock, when you migrate the stock. But if your stock is in a category which attracts 18% GST, then or more, 18% or more, you can take 60% input credit. If your stock is an item which attracts below 18% duty, then you can only take 40% abatement. But if your item is above 18% duty, then you can take 60% abatement and take that input tax credit.
There is a question from Shantanu Gaur. He asks, how would GST be applicable to startups or technology companies working on a SaaS model?
So GST will still be applicable to technology or whatever model they work on, because as long as they satisfy the rules that they are providing a service, and the definition of service under GST is very unique. It says service is anything which is not goods. So any service you render which is exempt outside the few exemptions as regards medical, health or education, every other model or service is subject to GST, and the normal GST sections will apply, and you would have to register for GST and the same rules will apply. There's no change.
Swaminathan Subramaniam asks, what will happen? Can supply precede invoice or vice versa?
I'm sorry, that question, I didn't hear that clearly.
Okay, so he is asking the scenario, what will happen? Can supply precede invoice or vice versa?
So it will be whichever is earlier, no? The rule is supply or invoice or date received, whichever is earlier. So you have to claim depending on whichever is earlier.
Javed Iqbal asks, how is GST affecting the online portals? Is it same for marketplace like Amazon, Flipkart and self-website such as Gioni, Samsung, etc. selling their products online?
No, so see, if you're a self website, then your self website can if you're a self website, then you can opt for that composition scheme. Otherwise, you can't opt for the composition scheme, and you have to go only for an IGST. And you would be an aggregator, correct? Sulochana, I didn't get the latter part.
So that is all he asked, that GST affecting the online portals. Is it the same for marketplace like Amazon, Flipkart and self websites such as Gioni, Samsung, etc. selling their products online? So he's wanting to understand, one is an aggregator site and one is the self website who are running their own business. So how is it going to impact these online portals?
There will be no impact, because the aggregator is not raising the invoice anymore, right? Who will raise? There will be two invoices, right, to the person. One will go from the supplier and one will go from the aggregator. So the person making the payment is making two payments to the aggregator. One is on behalf of the supplier and one is on behalf of the aggregator.
Sure. Vinita Chandy asks, what is composition or non-composition scheme?
So composition scheme is an option available for people below the threshold limit of 75 lakhs. So this is like a ease of doing business clause where on a presumptive tax basis, instead of you maintaining full records of your input, output, etc. to determine what is your net tax payable, the government is giving you a composition scheme and saying that depending on the industry you are, you pay a 2% or a 5% or a tax on your turnover. So you don't have to calculate on each thing. That is the composition scheme. Everything otherwise is non-composition.
Sure. Karnesh Mahendru asks, my courier company charges a service tax. How to take an input or credit for this, because I'm already paying the service tax to them?
Yeah, so now the courier company will not charge a service tax, it will charge a GST. That GST, as long as you have received an invoice and you have made the payment within 180 days, you can take that amount as input tax credit and offset it against your output tax GST payment which you have to take. So if the courier company is within the state, they will raise a CGST and a SGST bill. You can take that breakup and adjust it against your CGST, SGST going outside. And if the courier company is from outside the state, that means it sends a courier from outside the state, then that outside the state courier company will charge IGST, and you can offset it against your IGST liability. But you can take the input tax credit.
There's another question coming from Vinita Chandy. She asks, how do I claim ITC for existing stock?
So I just answered that. No, ITC on existing stock will depend on the nature of your stock. Okay, whether your tax liability on that stock is in the below 18% category or the above 18% category. If you are in the below 18% category, you can take input tax credit up to 40%, and in the above 18% category, you can take input tax credit up to 60%.
Vedanta Bavaria asks whether seller aggregator platform who do not charge any commission from the sales will be required to collect TCS, tax collection at source, 1% from the sellers. If yes, then how should be the TCS deducted from the sub-sellers, and how to issue the TCS certificate?
No, so there will online aggregator will have to definitely follow, because he becomes an e-commerce, and for e-commerce companies specifically, this 1% TCS has been brought in. So he will have to deduct TCS at 1%, and standard process of depositing the TCS based on the supplier's GST IN will have to be followed. That TCS collected by the online aggregator can be offset by the supplier against his output GST liability. No problem.
Sure. Karnesh Mahendru asks, can non-registered sellers sell on our marketplace if they are ready to give away the 1% TCS?
Yes, they can sell. There's no harm in selling. There's no harm at all in selling. What is your, as regards selling, there's no problem. The only problem is because whoever is buying from an unregistered dealer, they will have to, on reverse charge mechanism, pay the tax. So for the unregistered dealer, selling on the platform is not an issue. The issue is that the people who are buying, and if those people are apart from individuals. See, if you're an individual who's not subject to GST, there's no problem. But if you are an entity which is subject to GST, then any purchase you make from an unregistered dealer, you will have to pay the GST on reverse charge mechanism.
Michael
So
Gomez,
for sellers, there is no issue. The issue is from buyers.
Sure. Michael Gomez asks, what about the stating point on 1st July? Automatically, we have to switch to GST, and about earlier transactions?
Well, now we are all, this is a question which is more directed to the finance minister than me. I mean, we are still awaiting instructions on how the migration will be done, etc. As you know, the law is evolving on a daily basis. And the GST network meeting is again at the end of this week or early next week. So as further information comes up, we will know how the migration is to be done.
Sure. Vedanta Bavaria asks, in case an individual is running a cab with a cab aggregator platform, and the cab aggregator and the individual is issuing the fare receipts on his or her own behalf, then does he or she is required to get registered on GST?
No, see, the cab operator, someone will have to, who in this system is generating the invoice currently to the end operator? Is the cab individual? No, the cab is not. When you take an Uber generates an invoice. The invoice comes as Uber. Okay, so Uber will generate the invoice. So I don't think the individual would need to register, right? Uber will register and Uber will deduct the TCS and give it. Now it's up to each individual person whether he wants to try and claim the TCS, register and claim the TCS, or not, depending on the individual limits for each person. No, So if you're someone who has multiple, then it may make sense for you to register and claim the TCS. But if you have a one-off taxi, you may not want to register.
Kirit Gajera asks how GST work for warehouses where e-commerce company provide warehouses for suppliers in different states. Transfer from supplier to warehouses, is it taxable?
So if it's a different state, then transfer from one warehouse to another is definitely taxable. But if it's within the same state, then it's not taxable.
Pooja Sukhija asks, we are a marketplace who help women buy and sell second-hand fashion. So it is a peer-to-peer network with us just acting as agents in between. For example, when a girl buys a dress on Myntra, she would have already paid a tax for it. When she gets bored of it, she can sell it through our platform. How would GST work for us?
Who's cutting the invoice in this case? I mean, are you just providing the platform? Who is supplying? That's the important thing. Depending on that, the answer would be whether it is the supplier or the platform, no?
Vedanta Babaria asks, yes.
If you're selling on an open platform like OLX, which is just a platform which is giving buyers and sellers directly. So there is no, the invoice is not generated by OLX. The invoice is generated by the individual. If the individual to individual, then GST will depend on whether it's subject to business or not. Or is that my general business, or I'm just selling a one-off second-hand item?
Next question from Vedanta Babaria. He asks, what happens when a good or service has been sold and taxes are settled and then good or service is returned to supplier and whole transaction is to be reversed to consumer?
So the returns are considered in GST scheme, and you can, if there are goods returned, you have the mechanism for how goods returns will be adjusted will come out, because the process has not yet come out, the procedure, but in principle they have said that goods returned is a normal occurrence in business and you will be able to adjust and reverse the GST accordingly.
Satyam Nayak asks, we provide software services such as website development, animation to overseas IT client. Is it comes under export of services, or we are liable to pay tax for rendering such services?
So the recipient of the service is overseas. Okay. So it would amount to export of service, and normal clauses of export of service will apply. And if it's an export of service, then under a bond they can export without payment of tax, provided the entity overseas has no correlation or does not have an entity in the taxable territory. So you have to see whether there is that, suppose the company is overseas, but it should not have a branch or something in India, and it should not amount that you're just doing this for tax planning purposes. If that is the case, then you will be able to claim it as export, provided you satisfy those 5 conditions: that it is export, you are located in India, the client is located abroad, it is an export, the money is received in foreign currency. So if you satisfy those norms, then yes, it will be an export.
Another question from Vedanta Babaria. What to do in case the aggregator is not becoming a part in the whole payment cycle and payment is happening directly between the customer and the seller?
No, but aggregator has to be part, no? Otherwise, then he's not an aggregator. If you calling him an aggregator, that means he's part of the cycle. Then otherwise, he's just a marketplace provider. If he's an aggregator, then he has to be part of the cycle and he has to do the billing and he has to deduct the TCS. Sorry.
From Manish Saini, the question is, for online sellers where courier pick is also done by the aggregator, is there a possibility of taking input taxes on the invoice raised by the aggregator, which includes commission and the courier charges?
Of course. Yes. Full input tax credit can be taken. Again, provided that the invoice is clearly in your name, it is matched, etc.
Karnesh, I have opened your line. If you have any question, you can ask directly.
Yeah, hi. Hello, can you hear me?
Yeah,
Hi,
we are able to hear you.
Yeah, so actually my question is actually in continuation of the previous question that I had asked. The question is that if suppose a seller is not registered on GST and he's selling on our platform and we are deducting that 1% TCS and he's okay with it, but who should we file it in the name of? I mean, when we are filing it,
he will have to get. He will see. This is an issue. Just now we can't answer because we don't know how this filing is going to be. What is the process? I'm assuming that the government will give you an option of saying unregistered and registered, and if registered, give you a number, because if it's unregistered, he won't have a GST number. So maybe they will ask for PAN number or something else.
Okay, because the thing is that if they are not registered, is there a particular law which forbids them from selling online?
No, there is no law which forbids. No commerce in this country can be forbidden. It's just that it's a risk the buyer has to take, that he is buying from an unregistered dealer.
But that's an individual.
And then he has to assess the risk because once he buys from an unregistered dealer, he will have to pay the input tax credit on reverse charge mechanism, etc. So it's up to him what he wants to do. There is no restriction on the unregistered dealer that he can't sell.
But that person is an individual. So, I mean,
if the buyer is an individual, if the buyer is an individual not subject to service tax, there is no issue. But if the buyer is an individual who is subject to GST, then he would have to charge on reverse tax. If it's an individual to individual transaction, there is no question of GST.
Okay. Fine. Thanks.
You're welcome.
Vedanta Babaria, you may ask your doubts.
Hello.
Hi.
Yeah, we can hear you.
Yeah, sure. So, sir, my question would be in two parts. One would be, as I said before, the aggregator thing. Considering that we are not an aggregator but a marketplace, then what scenario do we have to collect the TCS at that point? If we are
no, but if you're a marketplace, who's doing the billing? Because
billing would be done by the individual supplier, sir. Considering the scenario.
No, so then if the individual supplier is doing the billing, and
yes.
But you are collecting some fee, right?
No, we are not at all a part during the payment process altogether.
You are not part of the payment process. So what is the value addition you are doing?
Sorry?
What is the value addition? What do you make? You are raising a commission or something on the supplier, right?
No, sir. We are not raising any commission here. We are just considering this that we are just a platform who are providing opportunity for some sellers or suppliers to sell their products to end consumers.
So then that's fine, as long as there's no value moving and there is no charge flowing for that service. But we only need to understand whether the department will say that this is a service for nil consideration, but there is still subject to some GST. Ideally, and then the department should not sit on your head and put some kind of fair value, saying that no, this is the value you have brought, and hence on that value addition you subject yourself to GST. So that is a risk you would be taking. But technically, if the bill is going straight from the supplier to the purchaser, and you are only providing a platform, then there's no money flowing through you, so there won't be a question of a TCS at all.
All right, sir. Now considering the second scenario, sir, what in case the things are happening in the same way, only the payment is getting processed through our channel?
So now you're coming. No, the payment is being processed through your channel means then you are acting as an aggregator. Then department will definitely say you deduct the TCS.
All right, sir. Fine. And one more question, sir, if I may. What in case, yeah, I had discussed a scenario earlier that there's an aggregator platform for the cab drivers, right? So
Yes.
now if the cab driver themselves are giving the invoices to and providing the service and cutting the invoices to end consumers, do they have those individual drivers? Do they have to register towards GST, considering their
No,
cap is of 20
but
lakh
they are
rupees?
cutting an invoice, but they are cutting an invoice on behalf of the aggregator, no? So if a cab driver is cutting an invoice, he's not cutting an invoice on his behalf. He's cutting the invoice on behalf of the aggregator.
No, no, sir. Not on behalf of aggregator. Considering Uber, he will not generate a invoice on the name of Uber. He will generate the invoice on his own name.
He will generate the invoice on his own name.
Right.
I think he will have to register for GST.
And given the scenario that the maximum redemption limit is of rupees 20 lakhs for an individual. Hello.
No, sorry, we are just internally. I'm trying to just mull over this 1 minute, huh?
All right, sir.
The cab driver will be treated as an individual, and then in the threshold issue will come into place whether he's under 20 lakhs or above
Right.
20 lakhs. If he's under 20 lakhs, then he's out of the GST thing. If he's above, then he would be liable to registration, because most of these cab drivers are not owners. No, the owners have multiple cabs. So then
Right.
the sum total of that business would have to be taken to understand the threshold, because the threshold computation includes any taxable, non-taxable business. Both have to be added on to calculation of your 20 lakh threshold. So the sum total may go about 20 lakhs, and then it will depend on the individual driver.
Okay, okay, sir. All right, sir.
Anyway, 1 second, just a corollary on this. The transportation is not a reverse charge. Transportation bills are not a reverse charge. So, if, for example, whether he's registered or not, the purchaser doesn't get hit by a reverse charge, no? Because transport is not under reverse charge. So basically, transport is not technically under reverse charge as yet, from what we understand.
Okay.
So if it's no, I'm talking about passenger transport. Goods transport, we are not talking about. So goods transport anyway is under reverse charge, no? Goods transport is under reverse charge. They are not paying on their own. So passenger transport is not under reverse charge yet. So I think that will hold true, that the individual car supplier will have to judge whether they need to be registered under GST depending on their individual limits.
Okay.
But
Okay,
this
sir.
is an interesting question, and maybe we can relook at this question in around a 10 days time once we have a little more clarity on how the law is evolving. If Sulachna or someone puts the question down and emails it to me, I'll keep it in mind and revert in 10 days once we know what's happening more in detail.
Okay.
Sure,
Sir, would it
Xerxes.
be
Yeah,
feasible
I've
by
already shared the questions with you. Yes.
Yeah, because see, some of these issues we don't have answers currently, and they are making daily changes in abatement, etc. So it may be, we could either do a follow-up conference once the rules are all in place, or
Sure.
we just answer these questions or something,
Sure, that's absolutely
No,
fine.
you guys at NEN think about it, but because
Yeah.
frankly we are learning, that is the reason why I had postponed this seminar to the end of June, because of this reason only, because the law is
Correct.
still evolving.
Correct.
So we don't have all the answers currently.
Sure. We will keep a note of that, Xerxes.
Yeah. Okay. So, okay. Anything else?
One last question from Pooja Sukhija. I'm opening her line. Yeah, Pooja.
Hello. Hello. Can you hear me?
Yeah, we can hear you.
So much for this session. It's been amazing, very helpful for us. So this is in continuation to that question that I have a peer-to-peer marketplace for women. So essentially, yes, we are aggregators. We have the invoices, we issue the invoices for the buyers.
Yes, tell me.
Yeah.
But you are issuing the invoice for the buyers. If you are issuing the invoice, then you would amount to the provider, and then TCS would be applicable on you.
But the only doubt was because my sellers are just individuals and my buyers are also individuals, so there's no business in
No,
between.
I know, but unfortunately, there is no clarity on that as regards GST. You know, because they are only saying electronic commerce, e-commerce, TCS will apply. Now, whether there is an exemption where the buyer and the seller are both individuals, etc., nothing is yet been taken out. So again, this should also be something where we have to watch the law as it evolves.
Okay. Okay. And plus, is there something also in connection of double taxation? Because something that I'm selling today has already been taxed before, because this is a second-hand good.
No, but it has so one second. What you're selling today has already been taxed before. So
Yeah,
what you're basically saying is that I bought this something new, and I already paid tax at that stage. Now I'm paying tax on the sale.
Yeah, somebody is paying at least, like, so if we are aggregators, we will be paying, but I don't know who would we charge it to, because now our sellers are individual sellers, so they will definitely not be applicable on GST.
So they won't have input credit to be able to take.
Correct, yeah. So if you're wearing a shirt today, you would have already paid the tax for it, but if you're getting bored of it, you can sell it through our platform.
But then if you, so I'm putting it the other way around and telling you that if you sell it outside the platform, then there's no TDS, there's no TCS, because it becomes a person-to-person individual transaction. But the moment you sell it through a platform, then it falls under the definition of e-commerce currently.
Okay, okay. But yeah, so how would my tax for the GST that I will be paying would be 1%, or how?
No, you are raising the invoice, right?
Yeah.
So your tax, your GST actually will depend on what is the product you're selling, no? So
yeah, so
depends
it's
on
apparel, so it will be, yeah, that 18%.
No, apparel depends on, there is something that if it is below 1,000 rupees, then it is at 5%. And if it is above 1,000 rupees, it is as 18%. But that is also again evolving on a, if it's manufactured under job work, it's a different thing. So it's all evolving yet.
Okay, okay. So, but whatever tax we will be paying through GST
will be what is the tax you would have to pay on the sale of that, and you would have to deduct TCS on that payment which you are making back to back to your client as well.
Okay. Okay.
Idea is to bring these people into the tax net. So either they are taxable. Unfortunately, there is no exemption on the TCS.
Yeah.
There is no exemption on the TCS. So the government is not saying that TCS is not applicable if you are paying to an individual who's below the limit or anything.
Okay,
okay. One second, I'm just opening the GST manual, the book. There is no exemption for TCS. There is no exemption on TCS. TCS is TCS and it needs to be deducted.
Okay, okay. So essentially what I'm earning, so if I'm selling a shirt worth rupees 500, just for an example, as a platform, I am an aggregator, so my commission would just be 100 rupees. So, but the GST charged would be on 100 or on 500?
So what are you
the remaining 400?
No, but now the point is that are you marketing your service? Are you going to show a split bill or a consolidated bill? Is the bill going to be consolidated for everything, or is it going to be a separate bill for your market charge?
Yeah, as of now, for the buyer, it's a consolidated bill.
So currently you're selling a shirt. So what happens is your supplier tells you that your shirt is at 400 rupees. You are adding 100 rupees on it and you are selling it at 500.
Yeah.
Correct? So then you would have to pay
correct.
the GST on 500, no?
Okay.
And you would,
okay.
You would have to deduct TCS on 400.
Okay.
So your TCS would be on 400, but but the thing here is that your idea of this thing, please understand. Sorry, I missed your name.
Pooja.
Pooja, the idea of this is that if you are an unregistered dealer and TCS is deducted, then based on your overall threshold, the unregistered dealer can still register, file a return and claim a refund if he is below the threshold, correct? So he has the option of claiming the refund, but the government wants to bring these unregistered dealers into the net to understand whether they are actually below the threshold or not.
Okay.
So if you understand the genesis of why this TCS has been brought, then you understand why. So the purpose is not to charge that guy TCS and take that 1% from him. The purpose of the TCS is to compel him to open his books on record, bring transparency and show the total whether he is genuinely below the threshold limit or not. If he is genuinely below the threshold limit, I'm sure the government will allow him to claim a refund at some stage.
Yeah, so I get it. Yeah, the purpose is good, but the problem is for my individual sellers, it starts becoming a problem for them because they are yet individuals in the.
Then you have to redesign your business in such a manner so that you raise a service invoice, no? So you are then only raising an invoice on your value add, which is the 100 rupees.
Which is the 100 rupees, correct? Yeah, we were thinking of reevaluating this now.
So you reevaluate how you do your billing, no? I'm happy to take this offline if you need any help on this, huh?
That will be great. That will really help.
Because maybe time has come where all these models will have to be re-looked at, taking into account the new tax points, no? Because if the taxation of the transaction becomes so larger than your profit, then it doesn't make sense. 18% of 500 rupees will be more than your 100, you know. So whether it's worth doing that, you have to understand, no? Then.
Sure, Xerxes. We will try to soon have another seminar and another engagement with participants. We have already overshot by 1 hour. But
this next month,
but that's what the engagement was more than required, and we are really happy to be able to connect to users who have so many questions. What I request users to do is that please leave in your questions if you have any, and I'll transfer those to Xerxes to take it over and answer you back. Such expert opinions is hard to get on a very day-to-day basis, but yeah, definitely it will make much.
And I'm on LinkedIn, etc. So just feel free to connect with me and write to me, and we can look at whatever has to be looked at. And one thing, Sulochana, is that one of the suggestions I would like to give, looking at all the number of questions, is that if next time 1 day in advance or 2 days in advance the questions are put, we'll be better prepared for the answers also. And because see, for the next seminar, the basics we don't need to go into. I think most people now will know the basics by then. So we will cut down on the basics and do more Q&A and answer more of these questions which are pre-fielded and then which are fielded live as well.
Even post seminar we can do it now they have got the context of the seminar, the topic, and they have got the questions in their mind. They can definitely come back and share the same with us so that we can take it up to you via NEN platform, via your LinkedIn profile. We are always ready to help them.
Yeah, No. Feel free. Okay.
Yeah. So closing the seminar for today's access, it was wonderful.
I would just be happy for any feedback. So if you
Sure,
have any
sure.
feedback, drop us a line. That would be good
Sure.
because it helps us prepare for the next event as well.
Yes. Participants, I'd also encourage you have given your polls, so that is a great way of letting us know. And we'd also expect you to take up a survey or the calls that we do to record your feedback post this webinar. So please let us know as to how this event went and what you felt. Xerxes, it was a pleasure having you on the webinar. I truly appreciate the way you covered each and every topic. And I would express my appreciation to the participants as well on behalf of Wadhwani Foundation for your dedicated participation. And we would be soon having another webinar series and would like to bring to you another enriching experience. So wish you success in your endeavor and thank you all.
Thank you.